Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer, and today I'm going to be analyzing AXON Enterprise. This came in by request down in the comments section of one of my other videos. So if you have a request that you would like me to do a video analysis of, if it's a stock that's in the S&P 500, which AXON is, I'll post those on YouTube for free. And if it's not, I post the other analysis that are not in the S&P 500 over on Patreon and in the full Cyclical Investors Club investing group service. Those links will be down in the description. The full Cyclical Investors Club is located over on Seeking Alpha. I've been writing there for about my 9th year now. And even though I haven't been on YouTube very long. So AXON is pretty interesting. I tracked it in my spreadsheet without really paying too much attention to it, and I hadn't looked at it for a while. As always, this isn't investing advice. This is just how I analyze stocks, and it's always a little unique to me because I have about 4 core strategies that I use, and sometimes stocks kind of fall between them, or they don't quite meet the standards for any particular one, or it's difficult to tell sometimes kind of where it falls. Now, since enough stocks, maybe several hundred stocks, do fall within kind of the parameters of one of my strategies or the other, if I come across something that doesn't fit, then I just kind of say it's too hard and I just put it off to the side. Or if it just requires like too much really deep work. I'm an unconcentrated investor, at least on my initial position sizes. So I also like to be able to make decisions quickly. And so if something just requires like a ton of work, then I just say, hey, that's too hard or it's too much work. And then I just personally move on, even if maybe if I did enough work, I could justify buying it. So I think these guys might have changed their name. I'm not sure this was always their name. They're the company that makes tasers and stuff. I had to go read their 10K to remember like what they did, which is probably good because this is a little bit unusual in terms of just the patterns and everything that I'm seeing with the earnings. Let's just start by looking at the basics here. Historically, their earnings have been really cyclical, or at least I would say volatile, right? So we have this big, I don't know when they IPO'd. I know that they became a company back in the 90s. So it's possible it wasn't too long before this that they IPO'd. And you can see this great initial enthusiasm back in the early 2000s based on this incredible earnings growth. But then that fell off rather quickly. And then we get down to their more kind of realistic numbers. And then during the Great Recession, you see earnings actually go negative a little bit for a few years until coming back around 2012 or so. So this is kind of like a very choppy start. Don't know exactly what caused all this, but probably just fluctuations in like taser popularity. Tasers are like the guns that like shock you, and or if you're not you, if you're getting shot by them, but that police can use, and it's like a non-lethal weapon instead of shooting like an assailant or a criminal or something. And it kind of demobilizes them for temporarily, so the police can get people cuffed and stuffed and everything. So this could be demand fluctuation or just kind of early stage kind of normal volatility with earnings. And then this might be explained by just municipalities not having any money. I mean, a lot of cities were basically going bankrupt during this time or close to it. So you can imagine like budget cuts and things could have eaten into these earnings. I don't know if that's exactly what caused it, but theoretically maybe it did. So really these it's not too useful of information today, but it is, other than saying, look, earnings can be cyclical. They can be affected by economic factors if they get bad enough. I don't know if we'll have the same type of issues we had during the Great Recession and the financial crisis that we'll see again, but we do see another decline here in 2015 and 2017. So there's definitely what I've decided to at least treat this like it has like cyclical risk to it. Now today, according to their filings, I left myself a note here. Yeah, okay. So today, like 2/3 of their money comes, I think it's revenues, comes from Taser. And the other third comes from software as service that they sell to like government, usually like government departments, private security, things like that. Storage of data, like think like body cams and things like that is what it sounds like. License plate recognition technology. There's a lot of these kind of side things. So that software business, subscription business basically, is growing, and it's about 1/3 of the business now. So the question is kind of how do you treat this business when you go to analyze it? And I don't think there's like an easy answer. But they definitely have more going on than just the normal cyclicality of the Taser market, right? So the way I'm thinking about this is we can see, okay, earnings after this boom during COVID, earnings kind of dipped a little bit here before taking off again this year. But we get a taste during that dip of what the stock can do. So it trades at a very lofty valuation. I would say this is based mostly on the potential growth of the recurring revenue from software business, which actually sounded pretty interesting when I was reading about it. I didn't read in depth. I just like got a feel for it. But the stock still fell more than 50%. So say twice as much as the market as the wider market during this time. So this tells us, look, the price cyclicality with the stock is still there. It's like a combination of like a growth stock and a cyclical business. So the downside is definitely risky here. But the way they recovered this year is pretty impressive. And they had that going before COVID, so that's all good. So you put this all together and it's like, okay, well, we don't know how long this is going to last. So basically the way I'm thinking about it now is it's a cyclical business. It's richly valued pretty much as a secular growth business right now. But I think it's a combination of both of those. So I would only probably step in and buy after one of these type of declines. So this said 55%. I think it might have been closer to 60 by the time if I really went from the absolute peak to the bottom here. So yeah, 20 over 200 down to 82, and it did that in like less than a year. That could easily happen again if earnings didn't fall very much for that to happen because the valuation is quite high. So I think the way that I'm going to approach this is it's a blend of like a cyclical business. So I want to make sure I'm buying during one of these dips if I decide to buy it. But I also don't want to pay like a crazy valuation. So it got down to like a 38-ish PE, maybe a little bit more if we use the peak PE here. And so I basically don't want to pay too much, and I want to buy during a down cycle. But I also would want to respect this general secular uptrend that looks like they could continue for a while. So I don't want to pay a peak all-time, well, they're basically at an all-time high almost right now. I don't want to pay that because, well, let's just look at what happened when you paid the all-time high. I realize that they've made changes and stuff over the years, but what happens when you buy during one of these peaks? Let's just pick this one. Okay, even after this, let's just go pre-COVID or whatever. So you only got a 5% return, and you probably had like a 90% drawdown or something like that to sit through, and you have to wait like 20 years, right? So you can get into a situation where your returns aren't particularly good. So even if you went from here to there, then you're negative for 10 years or something. So you want to buy it during at least the earnings don't have to fall off a cliff, but the price probably does. So here's how I'm doing it. There's not like a certain way you have to do it, but I'm looking at it as a deep cyclical that I want to buy, I think 60% off the high. I think that's what I ended up going with. Yeah. So this is the current high. This will rise as it makes new highs. So it's almost at a new high now. So right now about $92 a share. But here's the thing. I also want to make sure that its PE using peak earnings is under 30. So this just is kind of the first part of buying during a decline is sort of like we want to buy when the market's kind of freaking out a little bit about potential earnings growth going forward, which is what it did last year. But we also don't want to pay too much, even if this earnings growth continues for a long time. So a 30 PE is basically, and that, let's say they make these earnings right here, and then it falls like 60%, which is what we're looking for. We want to see what the PE would be relative to this peak. And if it's a 30 PE, then as long as they can grow like 20%, I'm not sure what they've grown since 20. So right now they've been growing like 28% earnings. That doesn't include this down cycle here. So if you included that, they've basically been doing this 20%, even though it's been choppy for like the past 8 years. If they can do that for like another 10 years, then a 30 PE is a pretty good price to pay for it. I definitely wouldn't want to pay more than that because we don't know what these earnings are going to do. We also don't know how deep a down cycle and those spikes are going to be. So putting all that together, I think if they did hit this price and it did fall to 92, I don't have my calculator here, but it probably would be pretty close to that 30 PE. See, this is almost double. Yeah, I mean, it would be. So they're kind of in the same area, and I think that's where I would want to be to think about buying it. The software stuff looks like it could be recurring and just be an ongoing thing like for a long time, but it's only 1/3 of their business right now, so it's just really hard to know how that's all going to play out. And then there's just the normal risks that come with any business in terms of competition and everything else. So I wouldn't pay more than that. What is it now? So it's quite a bit cheap. I mean, I'm talking about a big discount, but it was literally below that. I said 92. It was at 82 just last year. So it's totally, I think, a reasonable price to try to aim to get in. So this is a tough one to do because there's a lot of unknowns. There's a lot of different styles of business blended together and not all kinds of information, but that's pretty much how I would look at it. Like a bet placed at around that $92 area will at least give you decent odds of doing well over the medium and long term, like 5-10 years down the future. Okay, hopefully you found this one useful. This was an interesting one to look at. I hadn't really looked closely at it to see what was going on, and I had to read up a little bit on it. And I'm glad I'm tracking it a little bit more closely now, so thanks for asking for that. If you found this useful, hit the subscribe button and drop a request if you have a stock you'd like me to look at in the comment section, and I'll get it on my list on the whiteboard behind me, and eventually I will make a video. Later, guys.